It's Tuesday morning on the floor of the New York Stock Exchange. We are here with Mark Otto, again, that is a managing director at J. Streicher and Company. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, what is going on? We are sort of flat now. The market really now is struggling. We are running, 26% up for the S&P 500. It could be the best year in 15 years. What is going on? What is going to happen? Really, we are scared of a taper?
Yeah, I think that people are a little skeptical up at these levels. I believe that people are looking for reasons to take risk off the table. There's still a lot of distance in the next couple of weeks between here and the end of the year for there's still to be a Santa Claus rally.
Santa Claus Rally, we still have time. Let's remind people that Santa Claus Rally is at very end of the year. 1798 right now, so we are going to be above 1800.
Yeah, I'm bullish. I think that we are going to be above 1800. 1820 is really the projected forecast. If you were following the Bloomberg data, as far as coming into October over 10%, we gain another 6% by the end of the year. So I'm bullishly optimistic. I think that people are sort of pulled back off of Black Friday, saying, sales were down 3% from last year, but the Cyber Monday data was extraordinary. It was up 19% year over year. A lot more people are actually using their cell phones and mobile devices. So that accounted for 30% of sales. That's about 58% increase year over year as well. So people are out there spending. 2/3 of our economy is consumer spending.
Yeah, and we need those consumers to go back. So now we have a lot of economic data coming this week. A lot of people will look at them in a very particular way this time because we are only days to the next FOMC meeting. So yesterday we saw very good numbers from the ISM manufacturing. Do you really think that it might change the Federal Reserve mind? Indeed, they might decide to taper now in December?
Well, I think that the big piece of macro data that's tied to that is non-farm payrolls towards the end of the week. Last time that Bloomberg had actually forecasted 120,000, they landed at 204,000. So this time they're actually forecasting 188,000. So the bar has been raised. I think that if that number's astronomical number like it was last time, there's more of a potential. People are saying that probably what they would need is for Washington to get their act together and actually start agreeing on some sort of budget deal that's actually going to be on the horizon the first month of the year. So I think those two things, if they came into play, would probably increase the chances. Most traders I'm talking to down here, though, think that it's going to be in the first quarter of next year.
Yeah, it seems that March probably is the consensus, right?
Yep, absolutely. That's what everyone's talking about down here anyway.
So now let's talk about between now and the end of the year. As you were saying, of course, Washington will be again in the spotlight, but just in January. So between now and the end of the year, really there is not big catalyst coming. The Christmas season has started. We already said that the consumers are doing well. At least they are shopping online. So what it could be the next catalyst? There is a reason why the market can carry on and go up or just stay flat.
Yeah, I mean, basically the mentality right now is should we take some risk off the table and wait for the Santa Claus rally to actually occur. So I think that between now and the end of the year, it would have to be something that really surprises the market, that the market's not really prepared for at this point. The market is sort of priced for perfection. So if something disastrous were to occur, certainly we would see a sell-off in reaction to that. Right now, some of the things that I'm actually watching are the second largest economy in the world, China, is actually going to be opening up its IPO market. So it looks as though there's 750 companies that are waiting for or pending some sort of an approval. It's going to take them approximately a year to actually sift through all those companies. However, 50 of them on the immediate horizon. So coming very soon in the next couple of weeks before the end of the year is the next e-commerce stock out of China. So autohome.com is actually like Car Finder here. So these e-commerce stocks that have actually come out of China, there's been 6 of them this year in the past couple of months. They perform really well. So, that's one thing to keep an eye on, at least for the coming weeks.
And you were saying so many people, so many companies are waiting for an IPO here. So 2014 indeed could be the year of Chinese IPOs here?
Absolutely. I mean, there's 750 waiting approval. You have to think the majority.
It's a big number.
Yeah. The majority of them are going to land in Shanghai or Shenzhen, maybe even Hong Kong as well. Hopefully, based upon the fact that China-based companies here have done so well this year, particularly in that e-commerce sector, the solar sector, and the real estate sector. I mean, they've been an excellent alternative investment as our market's climbed up so high for valuations. So I believe that might be a catalyst to land more of those Chinese IPOs here in the U.S. rather than in the domestic markets.
Absolutely. So now, Mark, give me some numbers. 17.99 right now. We can expect a very tight range, I guess.
More than likely, yes. Support is right here at 1797 and 1791. Resistance is right here as well at 1803 and then 1810. So in order for us to actually break out one way or the other, we really do need a catalyst, which we don't have right now.
Absolutely. Thank you very much, Mark, for being with us.
Thank you.
And thank you for watching.